Hi, and welcome. You're listening to the X22 Report. My name is David. This is episode 1061A, and today's date is August 29th, 2016, and the title of the episode is Banks Are Preparing for a Nuclear Financial Event. Let's get into the economic collapse financial news. Now, we've been talking about the real estate market, and we are definitely seeing things are starting to rapidly fall apart. And it's not just here in the United States. We've been mentioning it in Canada, in the UK. We see Australia, their July private new home sales, they have fallen by 9.7% month on month. And this is actually starting to spread. And we saw this back prior to 2008, and then, of course, it ramped up. And this situation is getting worse and worse as time goes on. And eventually what's going to happen is that things are going to rapidly fall apart. They start out slow in outlying areas. They start to move in, and all of a sudden, people start to notice. And of course, when people start to notice, you'll see the corporate media, the U.S. government, the central bank come in saying, listen, yes, it's a slowdown of real estate, but everything's contained. Well, we know from the past that this is going to be a lie, because we realize and understand that, yes, real estate can go down. Real estate can crash. And throughout this entire period from 2008 up to now, we know what they've been doing to prop this system up. I mean, really think about what they've done. The central bank has purchased all the toxic real estate since 2008. It's still on their books. Can't get rid of it. The banks receive free money. They don't loan it out to the people. They send it right to the stock market to pump the market up. The banks are instructed, those people who are in foreclosure, don't let them out on the market. Let them live there. Take care of the homes. Let's drive prices up. Let's give free money to the hedge fund investment companies. Let them buy thousands of homes, townhouses, houses, apartment buildings. Don't sell it. Rent it out if you can. If not, well, just hold on to it. Don't let them out on the market. Get foreign investors into this system. Have them pay cash. In the meantime, mortgage companies have been laying off. Think about what happened prior to 2008 with the subprime securities. How many people owned 1, 2, 3 houses? How many speculators were out there? How many people were defaulting? Well, here we are again. But this time it's much worse, and it's spreading all over the place. And before you know it, people are really going to understand what's happening, because houses are sitting on the market between 160 and 190 days now. And no one's coming to look. Now, is it happening in every single area exactly the same? No. But it's starting to spread, and spread quickly. And people are writing in saying, yes, it is in my area. I've noticed it. What a big change. Realtors are saying there's a bit of a change. Now, of course, they didn't understand this back in 2007, 2008, and they don't understand it today. We see the retail market is continually falling apart. Aeropostale, they might be laying off 10,000 retail employees. The system cannot be sustained. Stores cannot stay open without people purchasing. And we see U.S. personal spending is declining. It is slowed once again. That's the term they like to use. It's slowing. Well, what's happening is people don't have the funds. If they are continually losing their jobs, and they're going from a high-paying job, and they're getting laid off, they go on unemployment for a little while, might have a severance. When that all runs out, and they start looking for a job, or maybe they're looking for a job during this period, they cannot find anything, and they take a part-time job, or they never find a job, they don't have the funds to spend. And when you subtract autos, because that is done through credit, you're not really taking money out of your own pockets, we see that spending has dropped considerably. And when we look at this entire situation, it is getting worse, not better. We see the Dallas Fed. We know there was a dead cat bounce, and we're seeing many of the same thing happening throughout all the feds for manufacturing and things like that, where we're seeing this dead cat bounce back in June or July, and all of a sudden it comes to a screeching halt. We know there was a dead cat bounce for the Dallas Fed. They went from negative 18 to negative 1.3, but guess what? In August, it plunged back down to negative 6.2, and it's contracting for the 20th month in a row. Hope also tumbled from 18.4 to 7. And we're seeing inventories, new orders, they're all slowing. So the situation that we're looking at is not improving. It's actually getting worse. And as we continually watch this and track this and see this with our own eyes, we see how this economy is continually deteriorating. Just like those individuals in The Big Short watched the subprime crisis. They watched the housing market and said, okay, something's wrong here. The whole thing's falling apart, and we're watching it in real time. We're doing the same thing now with the economy. And believe me, you'll be better off knowing what is going on here to prepare for what is coming. We see that U.S. government, the central bankers, a Harvard professor, they are pushing a plan to abolish cash. Kenneth Rogoff, the Thomas D. Cabot Professor of Public Policy at Harvard University and former chief economist of the International Monetary Fund, well, he's looking to get rid of cash. Hundreds, 50s, and 20s. They'll keep 10s, 5s, and 1s. Why would they want to do this? What would be the purpose of this? It gives them more control. Remember what is coming and what is coming afterwards. They're preparing the public because when this system starts to implode on itself, people are going to try to get cash. And most likely they'll want bigger bills. Now I know they're saying, oh, this is for drug money, this is for crimes. Believe me, all these individuals, they commit crimes without using hundreds, 50s, and 20s. This is to control the people and what they take out of the bank. To slow it down, to stop it. And to get people used to an electronic currency. So the government, the central banks, have full control in what you do. Today, if you have $1,000 in cash in your home, they can't flip a switch and say, see, we just took it away from you. They can't do it because you have it in your hands. If it's in your bank and something happens, or they decide, we don't want you to move this money, take this money, or do anything else, they flip a switch. And they say, okay, it's locked. They did it in Cyprus. It's called a bail-in. They held each person's funds hostage and said, what we will allow is for you to take out, I don't know, $200-300 a week. That's it. The rest you cannot touch. You can't transfer out. You can't take it all out. Nothing. And for the money that we're going to take from you, we'll give you worthless bank stock. We see there's a new SEC rule on money market funds, which is going to take effect on October 17th, 2016. Now, the October SEC rule will change the valuation of money market funds. The funds will be marked to market, and the SEC thinks this will prevent another run during a crisis. But really think about what they're doing here. The rule exempts funds who invest only in government paper. So everything else is perceived to be risky, so it must be marked to market for transparency. But if it is a pure government fund, the rules don't apply. So when you hear this, what does this mean? Well, this means more people are going to be sending cash into treasuries. Because as we know, countries are dumping treasuries. As we know, they need a buyer of treasuries. And they're going to use the people. They're going to force them into purchasing treasuries. That's what this rule is really for. We see Barney Frank is out there, and he is telling Janet Yellen, and remember, Barney Frank was one of the architects of the 2010 Dodd-Frank Wall Street Reform Act. He's telling Yellen that it would be a huge mistake for the Federal Reserve to raise interest rates before the election. Why would it be a huge mistake? Because it would risk destabilizing the markets and bringing down the economy. So we can see where this is headed. If the economy is so strong and it's doing so well and everyone out there is peddling fiction, why are they worried about raising interest rates before the elections? Because they know what would happen. It's never going to happen anyhow, but they know what would happen if they went ahead and they raised the interest rates. They know the entire system would fall apart. And that's why banks, major banks, they're preparing for a economic nuclear financial event. They see the chaos in the market. The European banks, they've been having a very rough time. They've been failing the stress tests. These banks are insolvent. We know that the central bank can continually create funds and prop up the banks. But they realize that this entire economic system, it is falling apart right now. And we see the Royal Bank of Scotland has warned its investors of a cataclysmic year. They sent ominous notes to clients, and they're predicting the worst case scenario. A nuclear financial event. And we can see right now, the Fed is out there already making plans for an economic crisis, an economic shock, where they're telling us they're going to be pumping in $4 trillion of newly created currency, just in case they're getting prepared for this. They've written a document about it. The major banks are telling clients that a nuclear financial crisis is headed our way. And by the way, the $4 trillion is more going to be like 15, 20 trillion when all's said and done, maybe even more. We know that's not even enough. Because they realize when this system comes down and the bond bubbles pop, the derivative market falls apart, just like the subprime security crisis, there'll be no stopping it. And they're just going to open the floodgates. And no one's going to tell them no. They're just going to do it. They won't wait for Congress. They won't wait for the president. They'll just do it on their own to prop up the banks. They'll do it to prop up the market. They'll do it to prop up everything except the people. And at that point, you will see the bail-ins. You will see your currency, my currency, completely disappear. It will be frozen in limbo. And we will be in this new financial crisis, something that we have never seen before. Something so bad that people won't even know what is happening. And this is why you need to get ready and prepared. Think about it. During The Big Short, that movie, during that period, those individuals, and there were many others, they were looking at everything, analyzing it, saying, hey, what the central bank is saying, it doesn't make sense. Because when we actually went out and we took a look around and we look at the delinquency rate, it's not what they're telling us. They're telling us a lie, and here's the truth. Well, this is what we're doing. We're looking at the truth, and we see what they're lying about. And yes, there were hundreds of millions of people that believed the lie. There's hundreds of millions of people today that believe the lie. There's a few that understand what's happening. There's a few that realize that this system is coming down, and we better get ready. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially 0.7% month on month. And this is actually starting to spread, and we saw this back prior to 2008, and then, of course, it ramped up. And this situation is getting worse and worse as time goes on. And eventually what's going to happen is that things are going to rapidly fall apart. News. Now, we've been talking about the real estate market, and we are definitely seeing things are starting to rapidly fall apart. And it's not just here in the United States. We've been mentioning it in Canada, in the UK. We see Australia. Their July private new home sales, they have fallen by 9. They start out slow in outlying areas. They start to move in, and all of a sudden, people start to notice. And of course, when people start to notice, you'll see the corporate media, the U.S. government, the central bank come in saying, listen, yes, it's a slowdown of... Hi, and welcome. You're listening to the X22 Report. My name is David. This is episode 1061A, and today's date is August 29th, 2016, and the title of the episode is Banks Are Preparing for a Nuclear Financial Event. Let's get into the economic collapse, financial and real estate, but everything's contained. Well, we know from the past that this is going to be a lie because we realize and understand that, yes, real estate can go down. Real estate can crash. And throughout this entire period from